Okay, so I was trying to make some scrambled eggs, and all of a sudden I noticed that this one egg is like really light. Well, it turns out it's empty. Son of a gun. Somebody actually went through the trouble, if you can see, of cracking the darn egg open, emptying it, and stealing the contents, putting it back together. I think this has been glued together. I don't know if this is just a fluke, but I'm pretty sure somebody did this. I've never had this problem in my life. I'm just gonna keep it here and not open it because I'm gonna have to take this back to the market. This is what happens when you buy cheap eggs, okay? Buy good eggs, they're worth it, and there's usually stuff inside. These kind of things, people trying to steal stuff, scams, empty promises, it kind of reminds me of those returns I told you about, 100%, 200%. A few of my stocks have now hit 300% this year. Is it a scam? Is it true? And if it's true, how come not everybody's doing it and talking about it? Well, I'm going to tell you about this right now, but let's get out of this kitchen because there ain't no good eggs here anyway. So if investing in resource stocks, or what I want to call today mining stocks, if it's so lucrative, why isn't everybody doing it? How come we don't have hedge funds making all these huge bets on miners? Well, the truth is some hedge funds are into very interesting miners, except they don't make the headlines because they're not tech stocks, and tech stocks are all the rage right now. Bio stocks are in vogue, and so old mining, which is like just grabbing stuff out of the ground, purifying it, go through all this process and getting a bar of gold, a pound of copper, or something like that, is not really sexy. But here are the main 3 reasons why you probably haven't really heard about investing in resource stocks as this wonderful thing that it can be. Reason number 1 is that it takes a lot of patience. And when I say a lot of patience, I mean a year to 5 years. Okay, yes, you can make money in a lot less time than that. In fact, if you are watching this close to the release date of this video, you will probably make a lot of money if you invest in gold stocks right now, or not, or maybe you'll lose a lot of money. It depends on what you do and how you do it. The mining stocks, they're so closely linked to the commodity itself. For example, you have the gold miners, and in gold, they're so linked to the price of gold that they move in cycles, okay? You can observe the mining cycles and the commodities markets, and you'll realize that sometimes all commodities move up and then they all come crashing down. Not all of them move in unison, but you can see that pattern repeating time after time after time. So what does that mean? Well, if you take a look at this chart, you will see that in 2011, gold and silver and a lot of other commodities peaked, and then they crashed really hard. Now imagine being one of those gold and silver investors way at the top. Yeah, like me. Anyway, it just so happens that in the downturn, the miners related to that commodity, they went down way more than the actual commodity. So gold miners went down by up to 90% in price in the stock market, when gold did not go down 90%. The flip side of that is when gold is up, say 1%, sometimes it's not unusual to see that the gold miners are up 5% or more. I've had some days where some of my stocks go up 10% in one day and then 15% the next day, and it's kind of scary, but a good type of scary, right? It'd be scary if it were the other way around. So yes, my stocks are going way up this year, but I started buying them in 2014 when I saw the value of my stocks go down, then down, then down, then down, then down, then down, and a little bit lower yet again. If you're not willing to buy a stock that you really believe in, you believe that the commodity price of that miner is going way up. If you cannot stand to look at your portfolio and see your value going down by at least 50%, then I don't think investing in resources is for you. Some people have seen the value of some of their stocks go down up to 90%. That really hurts, but you need to be the kind of person who sticks to it and who sees it through because you believe in the cyclicality of resources, because that's just their nature. One way of protecting yourself from that downward spiral when it does happen is you buy in tranches, which is a fancy way of saying don't put, oh, I can't help it. I was gonna say that don't put all your eggs in one basket, but after that egg incident, I think I'm gonna avoid that. So basically, if you know that you're putting in X amount, chop it up into 2, 3, 4, 5 smaller pieces and then buy it when the price is right. And then wait for a little bit of a pullback and buy again. That's recommended by some of the greatest people that have made a ridiculous return in these cycles that have been happening for many decades. So if it's good enough for them, it's probably good enough for you. That's how I did it with some of my stocks. I would not have the return that I'm getting this year if I hadn't put in, you know, my investment chopped up in little pieces, basically. Now, another reason why you don't see these mines and these mining stocks making the headlines all the time is because they're inconsistent. They're very risky because a part of the market is good, large, producing gold mines. Some of them are just projects of people that know we have some gold in the ground, but we're not sure how much. It's very difficult to find gold and know exactly how much you have before you start actually mining it. And some projects are just really people looking for gold. And sometimes you have good geologists that are looking for gold whose companies are worth millions upon millions upon millions of dollars because of the hope of finding gold somewhere around the world. That's why it's very risky, because I heard that it's somewhere around, is it 1,000 or 3,000 initial projects that actually become a mine. The odds are stacked against you. But the cool thing is that because it's all cyclical, when the market is going up, a lot of those hope stocks get pulled up with it, and what you can do is you can ride that uptrend and then basically sell your stock if you think that it's too risky, or if you see the drill results from that initial campaign not really be up to scratch. You can sell it and move on to a better stock. You always have that option. And the third reason as to why this is not talked about enough and why a lot of people like you and me missed out on all of these potential gains for so many years is because some of these stocks are so small that the big hedge funds just can't buy them. It's not interesting for a hedge fund to buy into a 10 million market cap company because maybe they have 10 million of capital to deploy. So that's too much money. They need something bigger. They need the big producing mines. And so they don't get into what we call the juniors. Juniors, depending on who you talk to, a junior will be something different. Sometimes it's just a small company. Sometimes it's an explorer. I like to differentiate between juniors. Juniors are just smaller market cap, which is, by the way, the value of all the shares put together is a market cap. And then explorers are, you know, what I told you, they're really the hope companies. We're drilling for something and we think we got something, but we don't know if it's feasible to take the gold out of the ground. You know, this is something that most newbies don't really understand, is that sometimes you find a lot of gold and then you just can't get it out of the ground because it's so expensive to do so that it's just not worth it. It's just better to walk away and leave all the gold in the ground, which is heartbreaking. So you might be wondering, okay, this is interesting. My appetite for risk is fine. You know, I'm kind of willing to put some money into this market. What should I do next? Well, hold your horses. You really need to do a lot of research before you put your money down on anything, especially right now, because let me tell you, the bull market for the gold mining stocks and for gold has started. in 2016. So from January to it is now July, the stocks have gone straight up. A lot of the stocks have gone up 200, 300, 400%. And the higher it gets, the riskier it gets as well. So you have to be really careful. There's a lot of content yet to come. I will very soon put out a video that talks about all the people that you should follow so that you're not just really drinking from my fountain, because let's face it, I'm just starting this process, and although it's working out very well for me, you need to have your mentors set up as the people who have made the most amount of money in this business in the past few cycles. So watch out, that video will be coming out very, very soon. Okay, so let's recap. I made a note here on the 3 things. One of them is you have to have patience. That's why a lot of people don't make any money in mining, because they just can't wait 6 months, 1 year, 5 years to see the stocks go up, because they do go down a lot before you see them spike up. The other thing is that they're inconsistent. 1 year they do very well, then after they peak they crash, and so it's very risky and you have to watch out for that. The other thing is that it's too small for most big guys, for big hedge funds. But people like you and me, if you're watching this video, you're not a hedge fund, you don't have $1 billion to deploy. Let's learn about this market more and more, and I'm sure you will enjoy the ride. The thing is, gold has been going up a lot this year. I would look into a pullback before actually going in. Some stocks I think still offer a lot of value. The really great news is if you have missed out the start of this bull market in gold and silver, don't worry, because one, I think it might still have a good couple of years left, and usually the very last leg is a blow off top, which it goes straight up and you got to get out before it crashes. The other thing is that copper hasn't moved yet. Uranium, it's hard to say when you're, uranium hasn't moved yet. There's also zinc, lithium, careful with lithium, cobalt. Anyway, there are plenty of other options and other great opportunities that will be coming your way, and we're going to be talking about all of those. So that's it for today. Study up, Google search mining companies, but don't go into an investment without first doing your own due diligence. I speak to you soon. Take care. Bye bye.